Hey San Diego, welcome back to the Apartment Geek Weekly. I'm here with a special guest today, Hunter Beaumont of Cazador Investments. So in a nutshell, Hunter, can you, in a minute, we're going to talk about rent control today.
Yeah.
Recently passed, signed by the governor. And I think big picture, it's been out there a lot, so I think people know some of the facts about it, as far as what it, what the rulings are and the 2.8% inflation that's April to April for San Diego County this year. So we're going to talk about that today. But in a nutshell, can you kind of run us down on your background?
Sure, absolutely, yeah. So, born and raised here in San Diego. Went to worked for a local investor here right out of undergrad. Then kind of cut my teeth there, learned about real estate investing and really an investment methodology from him. He was an opportunistic guy. He was, that was in 2010. He was buying very aggressively at the time, very opportunistically at the time. Loved that. Wanted to get some institutional experience as well in real estate, so went and got an MBA up at USC, worked for some institutional firms in Los Angeles, a large money manager up there, looking at markets across the country in an acquisitions role. Then went and worked for a private equity fund, specifically focused on multifamily value add investing, kind of all over the Western US. Okay. So I was a kind of their Midwest guy, covered Texas and some other markets for them. Deal guy. And then kind of also been buying things, personally on the side, trying to build a little portfolio since about 2012.
Okay.
Started with a little duplex in Encinitas basically and traded
Good
that.
For you. Good time to get in.
It was an outstanding time to get in. Very thankful for that, obviously. Made the jump in 2017, formed my own company, started raising outside investor money, syndicating at the deal level. I don't have a fund or anything. It's just deal by deal. Raise money from a syndication base, primarily friends and family, those kind of people, and almost exclusively multifamily here in Southern California. So we've got about 130 units here in town now, and we've finished a first generation of renovation deals. Now we've brought some of those to the market, and hope to trade those up continuously for as long as we can.
Yeah, good for you. And your last purchase, correct me if I'm wrong, Spring Valley?
Correct.
Is that right? 28 units. Yeah. Looked like an opportunity to just look like larger units.
Correct.
Ability to kind of get that turned around. So most of our viewers, as we kind of chatted about, are existing owners of multifamily.
Yeah.
How does this bill affect owners, moving forward? And we'll talk about it, short term, long term.
Sure.
What's your take on it? Maybe let's go out the next couple years.
Yeah, I think it's interesting. Rent control. It's kind of amazing that rent control bills still get passed. It's one of the few things that almost all economists agree does not do what you want it to do. And does not have the effects you want.
It's sad, frankly, but
it is, and there's unintended consequences. I think one of those is they're trying to stop rent gouging and crazy increases. At the same time, a lot of owners now are going to get this little thing that says, here's what you can increase every year, and maybe now they're going to do the maximum every year.
It's going to be fresher in their awareness.
So that's kind of interesting.
Yeah.
I think at the same time, very, very low rent, dirty kind of value add deals, maybe even in less attractive areas where you can't raise rents as much or as easily, might not see the values they did before, or the aggressiveness, I think, on the buy that they did before. So either you've got to be an owner that's going to pull that through yourself, or maybe that's a property that nowadays, the sooner the better to put it out there, honestly, so that someone that before rent control is fully enacted, before people really have a full understanding of all those things, maybe it's time to take one of those deals out, and move on to something else, a more stabilized deal.
Yeah. The way my mind works is kind of examples or metaphors. And I was thinking, you made an interesting point where I think it's easy for owners to be complacent and not raise rents for several years.
Sure.
Life's good, cash flow's coming in, etc. Now with this more constriction from the government, it's going to be on the forefront of owners to crank rents probably on an annual basis,
Yep.
right?
Yep.
So what that does, I'm thinking about this like in my own, some of the properties. If I have an asset and I raise, say I'm close to market rents, and I go up 5-6% next year, that's a pretty big increase on say a $2,000 rent.
Absolutely.
That's another $120. That tenant may get kind of like, oh, this is expensive. I'm going to go out and look and see what else is out there. Well, the competition are all of these other owners who are going to be more cognizant to raise rents. So what I think is going to happen with rents is the whole tide's going to go up. And I think ultimately this is, and it is sad because I think ultimately for tenants, rents are going to go up steadily. Unless you're the tenant who just has a sweetheart deal now,
Correct.
and you're paying $1,000 to live near the beach, and you're going to be locked in and have an under market housing for a number of years.
It's probably going to go up 7% a year for that person as well. But
Correct.
They're going to be okay for a while, I guess.
Yeah, it's gonna. Yeah, I mean compounding money,
Correct.
but they'll be fine. So, and then what do you think about? You know, I also think about expenses going up, and if rents go up, you know, now, you know, I think the short term for owners are going to be rents that will go up. But my concern, we talked about this a little bit, is tenants becoming more empowered, feeling like they just have more control.
Yep.
What are your thoughts on that?
Yeah, no, I mean, it's interesting because I think for maybe 5 years now, you know, the rising tide has lifted all ships. And there's some guys that have been made to look smart just because of market appreciation. When really there are a lot of risks that we face in real estate investing that just haven't manifested themselves. And this is the time where I think your underwriting gets questioned. If you've been very aggressive, you know, or if you've been lenient and haven't passed through increases or haven't been on top of your rents at your property, all of a sudden you got a situation here. And I think going forward, I mean, I hear quite a bit, you know, in central San Diego, kind of North Park and South Park areas, City Heights and some other areas about some tenant rights advocates now, you know, that are kind of banding together and, you know, and making all those things kind of more difficult. Not that, I mean, certainly there are people that cross the line and do something wrong, but even if you are, you know, an upstanding owner and you're just trying to get whatever you can, maybe you've messed up and haven't increased rents and you just want to get close to market. I don't think it's going to be as easy going forward.
Yeah, I tend to agree with you. So the operation expenses, just paperwork, jumping through more hoops, tenant advocate groups that you have to deal with, that could trickle down to an expense, like a higher expense to run these buildings and purchase them. Right? Because now you've got a 1 month relocation cost if you do give a tenant a 60-day notice, correct?
Correct.
And there's just, you know, the paperwork I think is going to rise.
Yeah.
That also makes it just generally across the, like blanketing this whole thing, it makes it less attractive to own apartments, I think because of more you know, BS.
Yeah.
Do you think that will, you know, take demand down, which econ tells us, you know, can impact values negatively? What are your thoughts?
Yeah, I think it's probably going to affect supply and demand directly and indirectly. I mean, I'm not an economist. I don't know exactly to what degree.
Yeah.
Right, but I see that. You know, once again, from my kind of institutional experience, which is not extensive, it's somewhat limited, but we generally had monthly meetings. We would update markets, and we had like a red, yellow, green kind of rating on each market nationwide. And, you know, if California hasn't been a yellow, you know, for those institutional firms for a while, I'd be surprised. And if it isn't now maybe a red, you know, or certain markets in California for multifamily, it's got to be somewhere yellow or orange at the least, you know.
Yeah.
And then as they, you know, then it kind of trickles down from there. But you know, for the builder, I think a builder has to go. Generally, is going to use some equity to build a project, and maybe that is institutional, maybe it isn't. But those equity guys are smart guys. Maybe they're not going to want to allocate to California as much. Yeah. And at the same time, you know, from the institutional side and the buy side, some of those guys might have seen markets like Santa Monica or San Francisco or New York where rent restrictions have been put into place, and then they've even gotten more restrictive over time.
Mm-hmm.
You know, maybe they think, okay, wait, you know, California did this, maybe that's not the end. You know, maybe more is coming.
That's what's scary.
Correct.
I think San Francisco, that's what happened. It you know, as a spark, it went into effect, and then it kept getting tighter and tighter. So that's a real threat too, you know.
Yeah, no, and you know, so as you know, this is what I do for a living, is multifamily syndication. I've been, you know, very proactive in following this legislation and sent out a little kind of white paper to my investors of what I think this means and impact on us. And you know, thankfully, I don't think there's a direct impact on any of my stabilized deals, but the ones that we have under renovation right now, we're sure in a hurry to get renovated as quick as we can.
Yeah, you get the definitely push those. Now, from a brokerage perspective, I'm seeing more inventory come online.
I imagine.
And it's interesting because I see a listing and it's like a 3% cap rate, 17, 18 times GRM with real low rents. Mm-hmm. And it's based on pro forma. It's based on 25, 30% rent increases. So, you know, and I've talked to some larger investors. It's like people's head are kind of in the sand on this. And it's like, nobody really knows what it's going to do. Sort of, it's business as usual for most people that I've spoken to. Now, we are seeing owners who are fed up, and they're just like, "This is ridiculous. It's going to get worse, you know, or it could. Mm-hmm. We're out. We're going to retire. They've owned their asset for 25, 30 years, whatever, or they're going to go into a single tenant triple net or into Arizona,
Texas,
exactly, another state." So I'm trying to think, my major was economics at UC Santa Barbara, so I'm always like thinking how this is going to impact values. If there's more coming online and surplus goes up, then I think in the next 1, 2, 3 years we could see some decrease in values. It just could happen.
I think it's totally possible, yeah. I mean,
it's interesting to say that because the market's so healthy.
Yeah.
You know.
No, where interest rates have been at, you know, the debt markets, I think, have fueled it quite a bit, even though maybe rent growth has run so strong. You know, it started to slow down a little bit.
Yeah.
It's almost impossible for it to continue at the rate that it has over the last several years.
Yeah.
But the debt, it's just like everyone's like, oh, I can just refinance out, or I can look at the debt I can get on this deal, you know. So I think that's pushed it a bit. And maybe, this is, you know, a little bit of a point of price discovery, maybe, you know. I think.
A little bit of a reset button, maybe.
I think it's totally possible, given the situation. I mean, you know, still, you know, the market still has very strong dynamics and fundamentals, I think. You know, but it is a point to question your underwriting and your assumptions for sure. Yeah.
You know, I was also thinking I think as an existing owner, your cash flow will be fine. It'll probably even get better than before. You know, long term, the sales market may take a hit for sure. I was also thinking, you know, it's going to be a needed, you know, aspect is going to be renovation contractors. Because if you have a building and somebody does leave, when you raise rents 5, 6, 7.8%, somebody takes off, more owners are going to want to go renovate that unit and set a high bar moving forward. So I was just thinking in my head, like, what relationships do I have with contractors and my renovation crew? Keeping those tight is probably real good advice for anybody watching.
And that's, I mean, I've found that tough right now just to begin with how you know, how much work there is out there, you know, residential rehabs and people building granny flats and everything else. I mean, it's like, I've got my primary contractor running on, you know, a few different jobs, and I feel like I don't even have his full attention right now. You know, it's
the economy is booming and people are busy, right?
Yeah, so that's great advice. Yeah, I mean, I didn't realize that when I started my business how critical having a good contractor was going to be. Yeah. I mean, I almost probably should have it in house at some point, and maybe I will. But yeah, very important. And as you do, I mean, because technically, if you're serving a notice now. You know, and you're saying, I'm going to take this unit out of the rental pool, I'm going to do major renovations. You know, if a tenant was smart, they would say, okay, show me your building permits for that. You know, like, show me the actual work you're going to do. Because if it's just flooring and paint, you know, I could just go to a hotel for a little bit or something.
Yeah.
Or put me up in a vacant unit and bring me back.
Now you're supposed to get permits, right?
Correct. So that's the thing.
See,
is
that's a game changer.
if you're
right there.
pulling permits, yeah, I mean, you better have a contractor that can do that for you in a timely manner. You got to get to the city and everything, you know. So
Yeah, it's not very fun going down there downtown and waiting for 2.5 hours just to talk to somebody.
yeah, correct.
Time and energy
Yeah.
spent to do that's definitely going to go
Sure.
way up, and that's real. So you can go up inflation 5% plus inflation,
That's
and that's
CPI.
dictated, is it April to April?
Sounds right.
Okay.
Yeah.
So if I raise rent 7.8% today, and I haven't done that since
Yeah.
last year,
Yeah.
5 years, can I do that again April 2 of 2020?
If you raise rents today,
Yeah, say it goes 7.8% today.
yeah,
Can I go up another chunk
I think
April 2nd?
on an annual basis. Yeah,
Okay.
I think once we get the CPI number,
Okay.
I think that's the idea.
And the CPI number is metropolitan, that's countywide, correct? Yeah.
Correct.
That's 2.8.
Yeah, so we'll see how it performs, I guess, on, but I think that's pretty standard to expect, a CPI number in the 2 to 3% range for San Diego,
Yeah.
for the meantime. I've heard lenders as well recently suggest that, if a buyer is looking to carry out a major value add and they're suggesting they're going to go in and increase rents anywhere above 6
Yeah.
or 7%, the lender's cutting that underwriting down and saying,
Huh.
you can't do that, basically.
It's going to be interesting, and I spoke to a couple of appraisers over the last 2 weeks, maybe a month. How I'm interested with how appraisers are going to value assets moving forward.
Mhm.
Because if a property in Hillcrest or Mission Hills, great location, has low rents, it's based. What's your pro forma now is
Sure.
is current plus 7.8%, right?
Yep.
So that's going to be interesting.
Absolutely.
If the appraisers are focused on price per unit, price per pound, or if it's going to be just like a cap rate deal. If it's cap rate, the appraised values are going to come in way low.
Yeah, I mean, it's a good
Right?
question. I think, they'll still have comparable sales, obviously, and be able to go off that. But yeah, on the income valuation aspect, it is going to be interesting. I think there's going to be some time where everyone's going to kind of figure this all out, I think it's going to take a little bit.
Well, I think, in closing, we could talk about this for probably an hour. It's not all bad. I think, and I made reference to that in the teaser email on the Apartment Geek blast that, existing owners are going to probably, if they're on it and they keep their paperwork tight and their management tight, they may even benefit from this.
Sure.
Just because of consistent increases, probably lower turnover, people moving around. And I think the people are going to get hurt are people that need to transact now. They may have low rents in their building. And I mean, us broker, from our perspective, we track the Ds, the divorce, the death, it used to be debt. Disgust was one back in the late 2000s, 2008, 9, 10. That was one that came up just because there was a lot of dilapidated assets and poor management.
Yeah.
And then people watching, I think we have all the facts too. So I don't want to bore people with this. This is more like deep talk.
Yeah.
But people can reach out to myself or Hunter if they have specific questions. I mean, you're doing your deals and you're raising money and you're looking for opportunities, and it seems like you're hungry to.
Trying.
Yeah.
We're doing okay.
Yeah. So.
Yeah, I think it is an interesting time. It's going to see how it all, interesting how it all shakes out. I think, one of the things that I sent to my investors was, hey, listen, there are unintended consequences of this kind of legislation generally. Like, it almost never does what it's intended to do, right?
Correct.
And I think one of those is, frankly, some of the markets that have rent control across the country and some of the most restrictive rent control over the long term end up being even more attractive to buy in because supply goes down, and it's almost a good place to own because there's demand there, and it's almost counterproductive to what the legislators are hoping to do to appease their constituency. But
that's well said. I think you're right on with that. I was just up in Santa Monica this last weekend though.
Cool place.
Yeah, cool city, big
Tough
city.
place to own. Great place to
Um,
own, but tough to be a landlord there.
Yeah, I grew up in North Pacific Beach,
Yeah.
and my dad said, PB's kind of turning into like a mini Santa Monica,
Sure, yeah.
which it kind of is if you
Yeah.
go down there on Grand and the major streets. But the homeless situation up there is so
It's
sad.
crazy, yeah.
I mean, it is like
San Francisco as
it
well.
was. I was shocked.
Yeah, that's
I was
crazy.
walking around a bunch up there, and it was like, oh my gosh, so expensive the rents and. So people can tune back or reach out if for specific scenarios, questions about any of this. We've kind of been real up with it, and I love having you on, Hunter, because you've been involved and aware from the forefront on this, and with that email that you sent out,
Sure.
I think it was like months ago,
Trying to stay on it.
trying to be aware and think ahead. So thanks for tuning in. Until next time, happy investing, and we have to go we have to get some more deals done
Let's
together.
do it. I like it.
Thanks for coming on.
Thanks, man.
Appreciate it,
it, Chris.
Yeah.